The silver market has gone through a radical change so far in 2025, and we may not fully recover, further bolstering the point for higher silver prices and a very different silver market than we experienced 10 years ago. Let's talk about it as we explore. I saw some recent numbers that had me really concerned about what's going on with silver, and in terms of the price, the supply, and the demand, the fundamentals really have changed over the past 10 years, but especially since 2021. The Silver Institute has a new little mini report or press release about what's going on for the structural silver market right now. We are in a deficit. And they are saying that we are on course for the fifth consecutive structural market deficit now. And this is something that I think is quite compelling. Now, the Silver Institute is an organization that reports based off of who they hire to do it, a consultancy firm called Metals Focus. And now some people feel that some of the numbers that come out of the Silver Institute aren't accurate. And there are other organizations, one chief among them, probably their biggest rival is CPM, who keeps much of their data behind a firewall, or behind a paywall rather. But nonetheless, even they will admit that there is a growing deficit occurring. If we're not there, we're very, very close to being there. There's a lot of different factors at play, and many of the data can be interpreted in a number of different ways. But one thing is for sure, everybody agrees that there's less silver available now than there was 10 years ago for the demand. Demand is increasing. The amount of uses for silver is increasing. Now, as I record this video, we have seen some pretty big pullbacks. And as to how far back silver will go, I don't know, but I feel very confident that we're not going to see it fall back to levels before all of this madness began. In other words, silver, it's doing its thing. So on the dips, that's a good time to buy if you're thinking about doing so. My friends at Summit Metals, they've got some great silver products for sale. They will also buy your silver from you. So check them out in the link in the description below and experience their great customer service for yourself. Silver is an amazing metal. You can't print silver, and it's not rare enough to be super expensive, and that's always been the case. But many people feel that it should be a lot more expensive, especially compared to gold. But there's reasons for that. But nonetheless, silver has hit a record high this year in nominal dollars, not adjusted for inflation. But we're also seeing exchange for physical gains, which are set to be the highest for 2025 in the last 6 years now. This has been a dramatic year for the silver market, with record metal prices, an unprecedented liquidity squeeze resulting in record high lease rates, record volumes being delivered into the CME vaults as a reflection of tariff concerns in the United States, and silver being officially designated as a critical mineral by the USGS. These developments coincide with an elevated macroeconomic and geopolitical risk, including U.S. trade policy, prompting investors to lift allocations to precious metals for portfolio diversification. As a result, investment demand has strengthened noticeably, comfortably offsetting the weakness across all key areas of silver demand, reports here from the Silver Institute. Against this backdrop, the silver price hit a record high and posted a 67% year-to-date gain on November the 6th. This eclipses the 52% rise for gold and the 14% increase for the S&P 500. In terms of market fundamentals, global supply is estimated to rise by 1%, underpinned by a modest return to producer hedging. Global demand is expected to decline by 4%, with the significant demand categories posting lower totals. Even so, the market has remained in deficit in 2025, marking the fifth consecutive year. So think that through for a moment. There are areas of economic uncertainty, and also, with demand going down, it's expecting to decline could be related to geopolitical concerns, supply chain problems, which means less silver is going to be consumed, but it's still not enough because there's still more demand for it. And likely, once the supply chains do come back together, some of them, by the way, are still recovering after COVID and the supply chain issues that occurred back then. And that's part of the reasons, I think, in a sense, that has sparked this massive boom in solar panel manufacturing and other areas with data centers that are going to be picking up yet again. I think 2026 is going to be another strong year for silver. I'll get into some of those numbers here in a moment. Some of the key findings reported by Philip Newman, who's the managing director at Metals Focus, and Sarah Tomlinson, who's the director of mine supply, during the Silver Institute's annual Silver Industry Dinner in New York, featured supply and demand estimates for 2025. And here are some of the highlights that they gave from their presentation at this event. The silver price had hit a record high of $54.48 on October the 17th. Despite the recent correction, silver largely held above $47, a sign of the underlying strength in the market. Since peaking in April at over 107, the gold-to-silver ratio has trended lower, falling to 78 in October, its lowest since July of 2024, suggesting increased institutional investor confidence in silver. So that's pretty remarkable, and we did see it double tap that all-time high again very recently within the last few days before the markets took a pretty big plunge. But nonetheless, as of right now, who knows? I think we could probably see silver stay well into the high 40s, and who knows? But we should expect more volatility and maybe even for it to fall back into the low 40s or high 30s. It would not surprise me if that happened. But exchange-traded products holdings are also up roughly 18% through to November the 6th, generating a year-to-date rise of 187 million ounces. This reflects investor concerns over stagflation, the Federal Reserve's independence, government debt sustainability, the U.S. dollar's role as a safe haven, and geopolitical risk. Now, the Federal Reserve really is not independent at all. It never really has been, even since its inception. It's just becoming more increasingly obvious these days, and really that has been the case for the last 10, 12 years, maybe even more than that. But nonetheless, there's a lot of corruption, I think, that's going on in the Fed and other areas in banking sector, as well as overall, probably even in other areas of finance, and that has really leads people to lose faith in the system in general, which is why we hold silver. Yes, indeed, and that's why I think it's important to hold, even through the highs and through the lows, if you can. Silver's exceptional price performance and its favorable supply-demand backdrop have further reinforced investor confidence. Roughly half of silver-backed exchange for physicals are held in London, which contributed to October's liquidity squeeze. Yes, indeed. Those London vaults were dangerously close to running out. There's no question about that. Now, global silver demand is expected to drop by 4% year over year to 1.12 billion ounces in 2025. All key areas of silver demand are on course to post losses, led by industrial demand, jewelry, bar, and coin demand. Now, industrial demand is forecast to actually decline in 2% in 2025 to 665 million ounces. This reflects the impact of global economic uncertainty stemming from tariff policies and geopolitical tensions, as well as a more rapid pace of thrifting due to soaring silver prices. In photovoltaics, global installations are set for a new record high. However, due to the sharp drop in the amount of silver used in each module, PV silver demand is forecast to ease by around 5% year over year. This outcome will be partially offset by healthy gains in the AI market for data centers and further growth in electric vehicle sales, albeit more modest than previously expected. Now remember, the other thing too is there is technology in the photovoltaic market that will make a much better panel, but it will require more silver in order to make that happen. I've not heard anything more about that new development here, but still, that is quite something if that does come into play as a role here. We'll see how that does. But so far, this report is saying that they're able to use less silver and for each module. And from what I understood, it was about 20 grams per module. So I wonder what it is now. Silver jewelry and silverware are expected to decline by 4% and 11%, respectively, this year for each segment. This largely reflects weakness in India, where the rupee silver price has been trading at record highs, well before the international market experienced the same trend. That's right, we are seeing record prices in many other countries before they finally hit here in the United States. And they just kept on growing. So that's something to think about as well, too. The dollar is strong compared to other currencies, so silver is reflecting really its true value in these other currencies, because the dollar is really only propped up because it's better than all the other currencies out there in terms of its strength and its rate of inflation. But there's other currencies that have less inflation, but they're not as influential as the dollar. Now, bar and coin demand is something else that we have to look at, as they are forecast to decline by 4% to a 7-year low of 182 million ounces in 2025. This is a result of the weakness of the U.S. market, which is offsetting gains in the other key markets of India, Germany, and Australia. Despite a recent uptick in U.S. demand, for much of 2025, the U.S. has had no contend with sizable retail investor liquidations. In contrast, India investors have bought into rising local prices, expecting further upside in 2025. That's an important note here, folks. We're finally starting to get it here in the West, in the United States, and my hope is that more people will come to hold on to silver and to buy it at with your level of understanding, with the way the markets are. I still don't think it's too late to get in. I believe that silver price still has room to move. Remember, it's when it goes back over $50 an ounce, people think, well, hey, it's capped at an all-time high, and will it get smacked down again? Yes, but $50 here in 2025 is very different than $50 in 2011, and we've already seen a double top in the silver market, which means that this rally that we've been seeing here is not the same as 2011. In 1980, forget about it. That was an anomaly that'll never happen again, at least in that same way. Now, mining sector is very important here. Global silver mining supply is expected to remain flat at 813 million ounces. Higher Mexican and Russian production will be offset by lower output in Peru and Indonesia. Primary silver supply is forecast to rise 3 million ounces year over year to 227 million ounces, accounting for 28% of global output. Mexican production is predicted to rise 5 million ounces year over year to 186 million ounces, supported by the restart of the Peñoles de Zapa following a prolonged labor strike, the ongoing ramp-up at Endeavor Silver Terra Nora, and higher output at Southern Copper. This average all-sustaining cost for the first half of 25 fell 9% to, wait for it, $13 an ounce. That's right. For primary silver mining, that is the mining cost. That's actually very good. It's the lowest since the first half of 2022. Its lower operating costs offset the rise in royalties and taxes. All-in sustaining cost margins rose, supported by higher silver prices reaching $19.70 an ounce in the same period, the highest in over a decade. So that is actually good news. I think that means that likely we're going to see more research done in Poland, which they assess to have a large amount of silver reserves in the ground. We'll see how that plays out. Recycling this year is expected to rise by just 1%, but still achieve a 13-year high. This increase reflects higher recycling of silverware, especially in the Western markets, which offsets a slightly weaker tone to industrial scrap data. Overall, in 2025, we see the fifth, that's the Silver Institute, they will see a fifth consecutive deficit, albeit lower year over year, is still estimated at a sizable 95 million ounces. For 2021 through 25, this results in a cumulative deficit of almost 820 million ounces. That's a full year's mining supply. This helps to explain some of the market tightness this year, indeed. And by the way, the years before that, when there was a surplus, it wasn't by a whole lot, honestly. through the years. So that gives you some perspective here. In fact, we 95 to the negative, whereas to the positive, the highest number of the past 10 years was 54. That's right, or 65 rather. 65 was the highest number. So to the upside. So there that is. Pretty amazing, and I think that means that if we're going to see positive numbers in the coming years, they're probably going to be very, very small, and there's other factors that are going to come into play with the supply chains, which I think means the silver market may not be the same again, because the silver mining, though kind of remaining stable, I think demand is going to outstrip it, and it's going to take a long time for some of these new silver mines to come online. It's harder and harder to get silver out of the ground than it was 10 years ago as well. There's less silver, making it more difficult, which means they're going to be relying on mining as a byproduct of other metals. Very important to understand that. So we'll see how this all plays out. But let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.